Welcome everybody to day number 3 of the Replace Your Dollar Bootcamp. Very excited to be here with everyone. My head might be disappearing into the Replace Your Dollar logo because of my Steelers hat, but it is still there. I promise I'm not like an AI robot or an image or something. It's really me. But just excited for all of you to be back here with me for night number 3 of the boot camp. A lot of great content that we're going to get into here today. Like you've been doing the first 2 nights, please engage, ask questions. The more that you participate, the more that you're going to get out of this. So we definitely want to encourage you to continue to do that. Our outcomes for today, what we're looking to accomplish here tonight, we're going to review what we did in day 2. We'll do that here in a moment. We're going to talk about support and resistance, which we touched on briefly in yesterday's event. It's one of the most important concepts in trading. And if you can understand that, you can really trade effectively in the market. So we'll talk all about that. We'll talk about how to identify trends so that you can trade with the trend, because the trend is your friend. We're going to identify the hammer candle and how to use that as a trading strategy, how to use that for an entry. And then we're going to do our practice quiz. And I need to change this. This is for Thursday's giveaway, right? Because we are going to be giving out $100,000 and a $50,000 funded account. So we're going to get some practice in for that. But before we move forward, let's just do a quick review. What we talked about the first 2 days, we've gone over what it means when something is bullish, when it's bearish. We talked about what a stock is, what it means to own a stock, the 3 components of a trade, what it means to go long on a stock, what it means to short a stock, the difference between day trading, swing trading, and investing. We went over the different parts of candles, how to read candlestick charts, and how they are different from line charts. So we really did cover quite a bit so far up to this point. And we're going to go even deeper here tonight. Before we do that, just to continue to share this with all of you, if you're interested in learning more about trading, if you are interested in having a coach through this process, if this is something that you want to pursue, then please reach out to me. Schedule a discovery call. Going to drop that link in the chat for all of you. And, you know, if you want to connect, you want to talk more about trading, share your goals, your background with me, I'd be more than happy to talk to you about what that looks like. So that link is there in the chat. Okay. Also, too, I've sent out the first 2 videos from the first 2 nights for all of you, so you can go back and watch those at any time. They are unlisted right now on our Replace Your Dollar YouTube channel. They will be made public next week, but we're making sure that the people who are actually here get this first. So you guys are being made a priority, so those aren't being shared with anyone else, just you. So you should feel special there. But I wanted to start with this slide here. And this is more just to get you thinking about what is possible through trading. And what you'll see here on the left-hand side, I have a dollar amount, right? So at the top there, $50, then you'll see equals $12,600. So you might be asking, what is this? Well, I wanted you to think about for a second, and I have my handy dandy calculator, which you can't see. If I put it there, you can. But there are typically 252 trading days in a year, right? If you could generate $50 a day from trading over the course of those 252 days, that would be $12,600 a year, right? If you made $100 a day, it's $25,200 a year. 200, 50,000, 400, $400. $100,800, $800, $201,600, $1,200 a day, $302,000, $400. These are all numbers that can be achieved through the market. And like I was telling you earlier, when you start this process, you'll start by thinking, hey, $50 is a lot of money, $100 is a lot of money, or like my Snapchat trade that I talked to you about, that $200 is a lot. But what you come to find out is how much is available through the markets and what is possible. And these numbers are doable. But think about that for a moment. How could an extra, if you just traded and made $50 a day, right, over the course of the week, that's $250. How nice would it be to have an extra $12,000? If you feel like you could use that or that could benefit your life in some way, put a 5 in the chat. Would that be helpful to you? Yeah. I'll take 12K. I love money because what it's able to do for my family, I'm able to help people with it, right? But it's possible. And that's just through, I mean, even if you lowered that number, let's say it was $25 a day, that's still $6,000, right? $25 a day, $50 a day via trading, that's not that hard. And if you start out and that's your target, those small numbers, and you do that for a year and you make between 6,000 and 12,000, it's a pretty good start, right? And then as you learn this and as it grows, then you could start getting into those bigger numbers. But I wanted to start here because it's important to talk about what is possible through trading. So that's why I shared those numbers with all of you here tonight. And again, success in trading is available to everyone. It's an investment in yourself and your family and what you've learned. And you probably heard me say 800 times so far over these 3 days. This is not a get rich quick scheme, right? And you've seen the number of participants dwindle as we come through here. This is something that you develop your skill over time, right? As you dedicate yourself to it, as you work on it, your skill is going to improve, and that's going to lead to wealth, and that can help you reclaim your time, achieve financial freedom. You know, today I got in a trade on Tesla on a short and got in the morning. It ran till probably 1 o'clock, hit my profit target, and I kept checking in. I wasn't in front of the computer. I was doing things around the house. So, you know, those are that's one of the benefits of trading. You don't have to sit there just and be in front of your computer. You have that flexibility, but it's all going to come down to what you're going to put into it. The market rewards the trader and the investor who studies, who practices, who puts time in. That's how this is going to work for you. All right. So we are going to start. We're going to jump into the content and let's discuss how stocks move. Right. And again, trying to keep things as simple as possible. Stocks do one of two things. They move up or they move down. Sometimes they move sideways. We call that chop or consolidation or sideways action, compressor. There's lots of different words for it. But what we want to try to identify when we're looking at candlestick charts is where stocks stop moving in one direction or another. So when it's moving up, where's that point or where's that area where it stops moving up and it pulls back? Or when the stock is moving down, where's that area where it typically stops and bounces and goes higher? These are critical elements of trading. And what we call these areas are support and resistance. And I talked about these briefly yesterday. And when we're talking about support, we're talking about where a stock stops moving to the downside. So think about it. It's there's support there that won't let it go any lower, right? So stock's coming down, it's dropping, then all of a sudden, boom, it hits a spot where the bulls come in and they push it up for whatever reason. They're protecting that price area. The flip side of that is resistance. And that is where a stock stops moving upward. So a stock could be on a bullish run, it's going, and boom, it hits into a resistance area and then it pulls back, right? For whatever reason, the bears are sitting there and they won't let the bulls take that price any higher. But by knowing support and resistance, we can learn the stocks that we trade. We can know their key areas, and that could help us know how to profitably trade them. All right. And so I have some old charts on here, but I'm going to just go over to TradingView. And TradingView is a charting application that if you are serious about learning how to trade or how to invest long-term, I'm going to highly, strongly encourage you to get a TradingView subscription. You could start out with the free trial version, then you can upgrade it, but you're able to do all your charting with TradingView. But let's talk about the concept of support and resistance. And I always like using Apple because they have a really nice resistance area that's kind of recent and a support area. Okay. So let's start by talking about support, right? And what I'm going to do, I'm just going to draw a simple line here on this chart. Let me find my line. Here we go. I'm going to draw a line right here. Okay. And what I want you to notice, if I zoom in a little bit, again, we're looking at a daily chart on Apple. Everybody should know what Apple is. I have my Apple iPhone right here. There might be some Android users out there, right? But what support is where a stock stops moving to the downside and then it bounces, right? So we see Apple here. It's moving down, moving down. People are panicking. Oh, my Lord, it's going to go to zero. Apple's going bankrupt. Boom, it bounces higher, right? And then it starts coming back down. It gets into this area again. It goes a little bit lower, but then boom, it bounces higher. So here's two key areas on this Apple stock where it hits this range. So you have to think about support and resistance as a range. It's not going to be an exact number, but in a support, when it hits that range, it should bounce higher, right? And then we see if we move over here, the same thing happens. It drops, it tests this range, it bounces back up. It comes down, hits that range, bounces back up. Comes down, hits that range, bounces back up. Now, it does break below it here, but eventually gets back above it and then starts going higher. Okay? But if you're able to look at a chart and you can count the number of times that it's hitting a support, and we have 1, 2, 3, 4, 5, 6. We'll count this as 7 times, and we know that it bounces there. If we ever see Apple come back down into this range again, what do we think is going to happen? Or what can we make a really informed, educated guess about is going to happen if Apple ever pulled back to this 134 price range? What would happen? It's going to bounce back up. That's simple support lines, and they are everywhere. They are on every stock. Now, here's the cool thing is you can go way back in time to where Apple first started. But why wouldn't we want to use support lines from back here, from like 2013? Why wouldn't we want to use these today in our trading or investing? Because I can tell you right now, Apple's not going to $13 or it's the end of the world. Why wouldn't we want to use those? They are too low, right? We want to look at current trends. It's old data. Perfect, Wade. Right. This is outdated data. It's irrelevant to us, right? We want to use more recent time frames. So we want to look at what's currently going on. Okay. So, like I was talking yesterday, if you know key support levels on stocks and the stock is trading around, it's chopping around in that area, you can buy some shares and do a simple trade. You can have a plan in advance to say, okay, let's say, for instance, if we go back here and let's just say that we're simulating history here, right? And we see, okay, all right, I'm noticing that Apple bounced here at this spot. So it bounced once, twice, 3 times. And as you're watching this develop, let's say that we're watching this in real time, we're watching and we're saying, okay, if we see it bounce or if we see it come back down into this range, I'm going to buy. Right. And then we see it come down. We could say, all right, I'm going to buy some shares here. Right. And then you could set up a simple trade. All right, I'm buying here. I'm going to be conservative. I'm going to sell here. I'm going to put a stop loss here. And then you could let it play out. Right. And that wick would have touched there. You could have got exited from the trade for a profit. So you could use simple support and resistance to set up trades. But more importantly, like I was talking about yesterday, for long-term investing, you can use support and resistance for your long-term investing. So now let's talk about resistance. right? So we know what support is. We have this support down here, right? That's where the stock stops moving downward. We also have this beautiful resistance area on Apple right here, right? This is where the stock stops moving upwards, right? So look at this. We see it hits into this area, pulls back, hits into this area, pulls back, hits up into this area, pulls back, hits up into this area, pulls back. You get the picture, right? This is on the chart. So by the third time when you see this hitting up into this area, you're like, well, I know what Apple's going to do now. And if you wanted to short it, you could say, all right, I know that it typically drops here, so I'm going to short. And oh yeah, I know there's a support down here. So I'm going to set my profit target here. And let's say you put a stop loss up here. And let's say you stayed in this long term. You did a long-term swing trade short. As this thing started dropping down, you're feeling good. You may have even exited for a full profit here. But let's say you stayed in. You got a little nervous here because you're in a little bit of a losing position. But if you would have held, this thing would have dropped and hit your target, right? And that's just by using resistance lines, right? So when you have both support and resistance identified on the stocks that you trade, that's where you can really begin setting up entries, profit targets, stop losses, right? So if we know this is a resistance area here where it pulls back, and we know this is a support where it pulls back, I could tell you there were a lot of traders who probably got in right down here, set a profit taker right here, put a stop loss here, and captured all this in profit. And I can also tell you that there's a lot of smart investors out there who buy and hold Apple. One of the biggest shareholders of Apple is a guy by the name of Warren Buffett. I can imagine all of you know who he is, right? I'm sure that whenever Apple drops into those low regions, he probably adds to his position, right? But just by simply identifying these areas on your charts, you can have an idea in terms of how to trade a stock. Okay. Now, there's one last thing that I want to point out about support and resistance, and that is that at some point, old resistance is going to get broken. We see that here recently on Apple, right here, this very strong resistance area was broken, and we made a new all-time high on Apple, right? But now notice, as Apple pulled back, because everything is going to pull back. That's healthy. That's a healthy market, is a pullback. Nothing just goes straight up. So now you know that too. When you hear people say, oh, the market it's going down, it's going. That's what a healthy market does. It doesn't just go straight up. It's got to pull back. It's got to rest. Think of a rubber band. If you keep stretching that thing, it's going to snap. You've got to, stretch it around what you need to hold together, and then you got to relieve the tension at some point. But notice this old resistance now becomes new what? Because it bounced there. The old resistance became new what? Who wants to take a stab at that? New support. Look at you guys. Sharp. Awesome. Yes, it became a bit of a new support. Right. And right now we're a little bit below that. And that's normal. We might come down a little bit more before we start to reverse and go higher because things are selling off a little bit. But that's support and resistance. Right. It's very, very basic concept, but to me, one of the most, if not the most important concept in trading and investing. I'm going to pause there. What questions do you have about support and resistance? So support, but how long before you make that new or normal support? Right. So you want to see, so just like over here, where you see these multiple touch points on this resistance area, or down here, the support multiple touch points, you want to see the price bounce off of it a few times. And that'll indicate that that's going to be a strong support, right? So what we'd want to see here, if this is our range, we'd want to see something like this, right? where it gets tested a few times. Maybe it comes a little bit lower, but typically the stock is kind of hovering around that area. So that tells you that, hey, the bulls are hanging out at that 170 mark and they're not letting it go any lower. Okay. Let's see some of your other questions here. Let's see, no questions. What is your time frame to set your line? So I always set, so when you're setting support and resistance, you could do this a bunch of different ways. And I'll tell you what I do. I like looking at the daily for support and resistance, right? So I'm looking at Apple, throwing that on there. But then I also like going to the weekly chart as well, right? Because those longer time frames are going to give you a bit more reliable information, but those daily support and resistance lines will typically line up there. And then when you go to the 3-minute chart, which is where we day trade, if those support resistance lines are ever showing up on your chart, that's a good thing, because you know these are key areas to watch, that if they get broken either way or you get close to it, like tomorrow on Apple, if we trade up into this 175, that it's going to hit its head off of that as a little bit of a resistance, because we've been bearish. I'd be looking for a short. But then conversely, if this thing starts to drop, right now, it's not going down to 132. But let's say that we had a support line down here, like 159. If we saw it drop in and we saw it hit that 159, we know that that would be an area we'd look for a bounce. Okay. Let me pop back in here to, was not Tesla at a strong support today, signaling that it would bounce. So let's go take a look at Tesla. So Tesla was bouncing. If I pull up my, let's see here, I got a bunch of lines on this one. So Tesla, if we go to the daily chart, and I don't want to get in the weeds here or get too technical with everybody, but this blue line right here is known as the 100 simple moving average. And you could see that this is functioning as a bit of a support for Tesla. And it hasn't gone below this line, right? And these lines are known as moving averages, which you can use for support and resistance. They're basically daily averages over a specific number of days. This happens to be a 100-day moving average. But who was that? Chad was saying how that Tesla's bouncing off of this 100 simple moving average today, off of a support, right? So those are other things that you can use to identify support and resistance areas. If you don't want to draw lines, you can use those moving averages. So it takes the guesswork out of it for you. But I strongly encourage you to draw your own lines to get familiar and comfortable with the stocks that you trade. How often do you look at your chart? Constantly. Because it's something that I love to do. But in the morning when I'm doing my pre-market study, you know, I have an idea of what I'm going to trade before I trade it. And then at the end of the day, you know, I'll be looking at my charts to get a feel for what happened today and how that relates to the bigger picture and what's going to happen moving forward. How many stocks would you trade starting out? So this is one thing that I always encourage people who are getting into trading to do. And that's, you want to start with just a handful of stocks. And by that, I mean only four or five max. Right now, I know if you look at my list, I have a bigger list, but less is more in trading. And if you can master the movements and be familiar with where the support and resistance is on a particular stock, you know its patterns, and you could get really good at just a handful of stocks, that's when you can be profitable. That's when you can achieve mastery. Because a lot of people think that, oh, I've got to trade 100 different stocks. When you try to do too much in the market, that's when you're going to get in trouble. So if you just have a handful that you focus on and you learn them inside and out and you just repeat those patterns and those processes with your trades, that's when you're going to be profitable. So in other words, how many different ones? Better to load up on shares of one. So you want to be diversified. But yeah, 4 to 5, and they should be good companies, profitable companies, good leadership. They're not going bankrupt, no penny stocks. So that would be my recommendation. I could see myself obsessing over this, would have to find a balance. Yes. Yes, this is something that you could very much lose yourself in. And I'm saying because I know a guy who gets into this stuff quite a bit. So, all right. So that's support and resistance. Let me come back over here to our slides. Give me 1 second. Bring this back over. Share. Pull this back up. Okay. So, here was a support on Microsoft that I was showing on these older slides, but I just wanted to jump into trading view. But you could see these bouncing areas here and resistance areas. So again, very simple to identify these areas on stocks and then use them in your trading. Okay. So the question that I've talked about and referenced a little bit here so far is how can we use support and resistance to help us know how to trade a stock, right? And it's simple. I'm going to come back to we'll just look at this Microsoft chart here. But if we know, again, very simple, very basic, and that's what we want to keep this. We don't want this to be super complicated. If we know this is a support, and we had 2 times on Microsoft where it hit the support and bounced, and we saw it pull back down into here. Just based off of that, we know that, hey, this is typically a bouncing spot, so we can find an entry somewhere in this price range. And then if we know there's a resistance up here and we want to be conservative, we could say, all right, well, I'm going to trade Microsoft here, but I'm not going to be risky and try to go to this 291.52 resistance area. I'm going to be pretty conservative. And off of this recent high that it made, that's where I'm going to take my profit. So you could set your profit taker there. And then knowing that these have been supports and recent lows, you could put your stop loss well below those lows so that you're protected if it pulls back. And the chances of it going below that support is not good because it hasn't done it before. So what you have set up here is a high probability trade exclusively off of only support and resistance. Here's your entry. Here's your stop loss. Here's your profit taker. That's setting up a trade just by using support and resistance. Now, would I recommend trading only off of support and resistance? No. There are other things that you want to factor into it. But as I said, that this is one of the most important concepts that you can learn. When you know these key areas and how the price behaves in those areas, you have an edge in terms of how to trade it. And that's when other things like your trading strategy come into play, your knowledge of candlesticks, volume. But honestly, it is not that difficult. It's pattern recognition. It's knowing how a stock moves, and it's knowing how it behaves. And I'm sure you guys have heard the saying before that past behavior is the best predictor of future behavior. And it's not 100% of the time, but a lot of the times it's going to do a similar thing. Okay. So that's support and resistance. All right. I feel like give me a 9 in the chat if you feel like you have a good handle on that concept. All right, good. All right. So we'll keep moving forward here. This is a good audience. All right. So trend. All right, let me come back here. My picture's a little small, and I'll make this bigger. So when we talk about the trend, basically what we're trying to identify is, are we in a bullish trend or are we in a bearish trend? And I'll give some show you some candlestick charts here in a moment. We'll talk about it, and I'll have you identify, hey, are we bullish or bearish? All right. You want to identify the trend because that's going to give you an edge in terms of how you're trading it. Now, there are several types of time frames we can look at on our candlestick chart, so we can have different trends depending on the time frame that we're looking at, right? And really, the way we're identifying the trend is by visually looking at it and seeing it. So you can see here on this example on Microsoft, This is a daily chart. This arrow going up, we see all these candles just slowly going higher. This trend right here, and this was January 2023 into February, this would have been a bullish trend over these 2 months. Okay. And then when we see this pullback here over probably, what's that, a week, a little over a week, you started a little bit of a bearish trend. Right now, that's just on the daily. You can zoom out to where you're looking at the weekly and monthly to get a feel for what the overall trend or what the primary trend of the market is. Are we in a bear market or are we in a bull market? And the same thing goes with your daily charts when you're day trading, right? When you're looking at that 3-minute chart, you could be in a primary bull market, but the trend on that day that you're day trading is bearish. So you'll have to identify the trend based on what your time frame is and what the candles are telling you. All right. And that's important because we want to trade with the trend. We don't want to go against it. Okay. So how can knowing the trend of a stock help you with trading it? Because it's going to let you know that, hey, if it's showing signs that it's bearish, I'm not going to look to go long. I'm going to look to take it short. So let's look at some examples of this. All right. And let me bring up my trading view. Stop my share again. I know I'm bouncing back and forth from a lot of different screens here. But let's look at ExxonMobil today. All right, real fast. Let's test your knowledge. What would we call this area here on ExxonMobil? Resistance, right? And so here's the thing. We just hit into this resistance today. We actually broke above it. ExxonMobil made an all-time high. Okay. And so we see that the last few times that Exxon has hit into this, it's pulled back, right? Now, does that mean with 100% certainty we could say tomorrow that, hey, this thing is just going to fall off a cliff? No, because it still could go higher. However, we know that there has been past history of Exxon pulling back. So that's just something to keep an eye on. But anyway, if we go into a 3-minute chart here on ExxonMobil, this is from today. And if you look at the candles, what is the trend here on this 3-minute chart this day? Is it bullish or bearish? Bullish. Yep. And you can see that even within this bullish move you have a little bit of a pullback. What they call this is a retest. Okay. And that's just a resting period and this is where a lot of people would panic. So some people may have gotten to a trade right here today, taking this bullish, and then this was going up. They're feeling good and it pulled back and they got scared. But a retest is a normal movement in a trade where some people are taking profits and then boom, it climbed higher. So you're right. That trend right there is bullish. Let's look at Tesla from today. All right, here's Tesla. Overall, the trend on Tesla today, bullish or bearish? Bearish. Yep. And we see here, and I took this trade today. I got in, where did I get in? I think it was somewhere right around here. You see, we got this big move to the downside. It's bearish, right? You can have made money here. Now, check this out. The primary trend just on this day is bearish, but we do get a bull move here. So you could have made money here and then traded it bullish and made money there. But still, the overall trend on this day is bearish, right? And then let's look at two more. This is good practice for you guys. Let's look at Apple today. Bullish or bearish? Overall, bearish. Yep. And then let me find one more for you. Let's go to NVIDIA. Now, this is kind of a tell of 2 days here on NVIDIA, right? You kind of had your move down and a move higher. So we could say that this is kind of kind of a mix of a day, right? But what could be, tell me this, what would you characterize this day as? Would you say it was more bullish or more bearish? Overall bullish. Right. So we would say that this is the trend here on this day was more overall more bullish because we made this high here, and it really just made a strong move here at the end of the day. Cleared these highs from earlier in the day, so it did push higher. So you can make an argument that it's more bullish. I mean, you could argue that really the trend is neutral. And there's another type of movement that I want to show you. And let me try to find a good example of this where the stock is just kind of going sideways, right? And that's a day that you don't want to trade. Let me try to find an example here of something choppy. All right, this is kind of a choppy day right here. But do you see how this is just kind of moving sideways? So you do have little movements in here. You got a little movement higher, then a little movement lower, but you're not getting a lot of extremes, which is what we want for trading. So when you see days like this, where it's just kind of ping-ponging in a channel, for instance, if I draw a line here and a line here, we're kind of hovering within this channel. This would be the third type of movement that I talked about. It's not bullish, it's not bearish. Sure, there are tiny little fluctuations within here, but we would just call this an inside day or a choppy day. And these are the days that you don't want to trade a particular stock. So if one of the stocks that you trade and you follow is choppy like this, you don't even want to waste your time, because we want those big, strong moves in order for us to make profits, right? So that is the concept of trend. The last thing I'll show you, if you go to a weekly chart, and let's just look at something different for now. Let's go to, let's look at Meta. So this is a weekly chart here. So you can see since October of last year, where we really hit some lows, we've been in a big bullish move on Meta being Facebook, right? So that's the longer term trend. But this is what I was talking about, how when there's some selling in the market, people panic. So here, look at this big move we've had, bullish. If you go to the daily, we've had these bearish days. People are like, oh my gosh, everything's going to zero. But these are normal occurrences in the market. Here's a bear market right here. So this was last January, or this was January 2022, this big extreme move to the downside, right? Meta went from $383 down to $89.04, right? It lost $294. And then it made back from that point $237, right? So these are your big bear movements. Here's a bull movement, okay? So that's trend. Trend is your friend. What questions do you have about trend? And remember, the trend is your friend. That may be a quiz question. Let's see here. How do you know that's going to happen? Wilfredo, if you could be clear on that, I could try to answer that for you. David says, what time do you usually trade? Trying to understand how long you need to ID a trend. So the time of day that I trade, so I am a market open guy. So I'm in front of my computer right at the market open. All right, so here's Meta today. So you can see we chopped along. So really 9:30 to 11:30 is when I trade. That's where I look for my entries. So here on Meta, if I'm watching this, there's nothing there. It's choppy. I wouldn't trade it. Right now, Exxon, we get some movement. Now, there are other things we want to look at too. And I don't want to get too far in the weeds, but what you could see is the previous day on Exxon, the price gapped up the next day. So we know there's some strength there. So using that type of information can help you identify the trend and know how to trade it as well. Okay. So all those things help us try to find, what the trend is. In day trading, do you pull money back out into cash account overnight? So I don't do that every day. I'll do it typically at the end of the month. I'll move things around. And in the brokerage account that I have, you're able to have multiple accounts. You can have your long-term account, your day trading account, swing trading account. So you can move money seamlessly in those. And then I think I was mentioning on the first night, whenever you want to make a withdrawal, you could just simply move it into your bank account. And it's very, very simple. You say that you don't want to trade days that the stock is going sideways, but how do you know that? So it's a good question. It's actually pretty simple. So if I go back to that meta chart, so here's today. So every trader needs to have their own set of rules or a trading plan that you follow. And it's called rules-based trading, where you basically set in advance what types of trades you will take and what type of trades you will not take. And part of my plan is if I'm watching a stock and I haven't seen it break above the high or low of the previous day's highs or lows, then I won't trade it. I'm waiting for a stronger move. So we can see here, this thing is just chopping and going sideways. These aren't big moves on a stock like Meta, right? We're talking maybe $1.50. Meta's a $300 stock. It can move $20 in a day. So when it's not moving in sharp increases or decreases, then we wait. We wait for a signal that says, hey, there's a possibility that the trend is going to change. And actually, let me throw a line on here. You throw this on here and I'll show you if I would have been able to trade this with my strategy. So 1 second here, input. So this blue line is the 10 EMA. So as this thing is going sideways, the other thing too is when you have sideways movement like this means that pressure is building and there's going to be a move in either direction. And the strategy that I trade, if I would have been following this and I've seen all this pressure building, this candle, when this candle right here came in, I could have set up a short here based on my trading plan and shorted this. Now, for whatever reason, I just wasn't following Meta today. But just by looking at the chart, you could see this is just sideways movement. And based on my trading plan, I would not have taken a trade here. So I hope that answers your question. Yeah. So, and the other thing too, Wilfredo, is you can set the trade up in advance. And let's say that it is chopping and you think it's going to break out. You could have it set up and automated. But if it doesn't hit the price that you want for it to make the move that you think it's going to make, it won't trigger you into the trade. Yep. How quickly can you change your lines or your entries support profit taker? Immediately. Good question, Kirk. So you could just go directly in your broker. Some brokers, so for instance, there's a paper trading feature here on TradingView where you're able to, you can trade just a simulated account, but you can drag and drop. Let's say that you have a stop loss, take profit. It will have your entry, your stop, all that on the screen, and then you could just drag and drop it. Right now, I really don't use this paper trading system, but for those of you who want to experiment with paper trading, you could do it right here on TradingView. But it's pretty easy to trade your or to change and modify your stop loss, your profit taker. You can drag and drop some of it. You'll just click on a button, you'll update the price and hit submit. But it's pretty easy to do. Okay. And recommendations for a broker. Recommendations for broker, interactive brokers, IBKR. So yeah, that's what I would do. And then Kirk says, is this profitable? Is what profitable, Kirk? I'll just wait for you to type that in there. Moving the lines. Yeah. So that's the other thing. And I think I mentioned this yesterday. So for instance, let's say that we entered a trade. Let me get rid of these. Yes. Yes. Let's say that we entered a trade here on a short, right? No, I don't want that. Hang on. Let me find my lines, guys. There we are. Okay. So let's say that we entered a short here and we had our stop loss up here. We had our profit taker down here. Okay. Once we get triggered into this trade and we're entered into this trade, what you're able to do is you could take your stop loss and move it into the money so that if it ever does pull back on you, you're guaranteeing that you're leaving this trade with a win. So you're making it an unlosable trade. So yes, I do encourage you to move your stops, your stop loss and your profit taker. They call it trailing your stops so that you're maximizing the probability that you're going to win the trade. So I absolutely encourage all traders to do that. Yep. All right. So we're going to jump back into the slides. I think we're making pretty good time here. So that's the trend. And then we're going to get into a strategy. And this is a very, very simple trading strategy that you can use. This is better for longer term trades, for swing trades, for long-term investing. You can use it for day trading, but it's known as the hammer strategy. And so these candles that you see on your screen right now, these are probably the strongest of all candles in trading. They're known as hammer candles. So you have a long lower wick, right, which indicates buying pressure. People are buying the stock, pushing the price up. And you'll notice that the top of those candles, the candle body is almost like a little hammerhead, right? It's a small body. The price closes higher than it opens, and it has a little tiny wick. Now, they could be bullish hammers or they could be bearish hammers. Both are typically bullish and indicate that there's a reversal coming. All right. And if you could find these located at the bottom of a pullback, this can often indicate that the stock is ready to bounce. Now, where do we know that stocks typically are ready to resume back in an uptrend? What area? What area is that? Support. It's support. So if you can find a hammer in support, you could potentially have a trade setup. So let me show you an example of that. All right. So does anybody, we're looking at this chart here. I think this was that Microsoft chart. Does anybody see a hammer at a support that's indicating a pullback that we could potentially trade? Yes. Yep. So it is right here. And I know these candles are small, but right here, we have this big pullback, right? And remember, stocks can't go down forever. And oh, weird, it's hitting the support. And oh, weird, there's a hammer. There's buying pressure. So what you could do with this strategy is set an entry above that hammer, find the most recent lows, and we see they're over here. This could be our stop loss. And then for your profit taker, find a recent high or resistance and come in conservatively below that and set your profit target. And just by knowing support and resistance, by knowing what a pullback is here on this bear move, and by finding this hammer, you could set up a trade that would be profitable. Right? And we could find these, I don't want to say everywhere, but let's go look at Apple. Let's go back to that Apple chart. And I use Apple as an example a lot because it's a really good stock to trade. So if we go to Apple, and remember, we're looking at these long-term time frames. So if we go to Apple, we go to daily. Let me get rid of this 10 EMA line here. Let's hide this. We have our support lines. Okay. Let's see if we can find any hammers. All right. And it doesn't mean that we're going to find them everywhere. But we do have one right here. And it's not going to be perfectly at the end of that, but we have a hammer candle right here. Right? At a pullback, enter above, stop below recent lows, set your profit target conservatively. There you go. See if we can find another one. How about this one over here before we went on this big move? So do we see any hammers over here at this pullback? There's one right here. Right? Here's your hammer right here. Right there. There's your hammer following this big pullback. Here's your entry. Most recent lows right below these lows. You could be conservative with your profit target. There's a trade. All right. So there's Apple. And let's look at one more chart just to see if we can find something else. Let's go look at Tesla. So Tesla, here's a daily. Here's this big, massive pullback that we had in the fall. Let's see if we can find any hammers here. Here we go. Here's one right here. Okay. Right. You had this big pullback. Boom. Enter above. Stop below. Profit near recent highs. And it's profitable. So if you do set up a TradingView account, go and look at this stuff. Draw support and resistance lines. Go find hammers. Test this. Don't just take my word for it. I would hope you wouldn't do just that. You got to go, if you're really interested in this stuff, go look at it. And you'll see it. You'll find it. Right? So that's just a simple strategy that you can trade. It's a hammer strategy. That's a hammer candle. All right. Let me bring this back up. And so we're getting close to the end of this, our slides here. So that is the hammer strategy. And so one thing that I did want to just spend a few minutes talking about is upper and lower wicks on candlesticks. Okay. When you have, and this is a hammer candle, when you have this big, long lower wick like this, this indicates that there is a lot of buying pressure, that the bulls are jumping in. They are buying this thing up. So that's why the hammer is a really powerful candle. When you see it, you know there's buying pressure. Now, you have to read it in relation to where it is on the chart. And these are really strong when they're near supports. But just do a simple exercise you could do is going through TradingView, pulling up a stock that you want to look at, find the hammers, see what happens with the candles after hammers. More importantly, pay attention to hammers at supports. What happens when you see hammers at supports, right? There's that buying pressure. What you probably will see is the price going up, all right? Now, I also want to point out too, when we have long upper wicks, we have selling pressure, right? This long upper wick just indicates people are belling on this stock. They're getting out, right? They're driving that price down. Now, the opposite is true. So I talked about that hammer strategy, but if you have a stock that's going higher, right, and it's getting near resistance, and you see, they call this an inverted hammer, right? If you see an inverted hammer at near resistance, that is a reversal signal. If a hammer candle at a support after a pullback indicates that it's going to go up, what do you think an inverted hammer found at a resistance could be an indicator of? Selling. Yep. And I'm sure if we go and look, and let's just do that real fast. I haven't even checked this, but if we go look at that resistance on Apple, I'm sure we could see, or maybe I'm wrong, and that's fine if I am, because they're not always there, but they do indicate that there is selling pressure. Here, let's look at Tesla before it started coming down. Yep, right there. Inverted hammer, right? You had this move up, and this is called a double top here. Now it's a little bit more advanced, but here's your inverted hammer. We hit this resistance 3 times. Oh, weird. What does it do to resistance? It drops. Oh, I have an inverted hammer. I'm going to set my entry up here. Where's my lines? I'm having trouble finding my lines. Entry here. All right, these are the highs, so I'm going to put my stop loss here. All right, there's a support down here. I'm going to be conservative. There you go. Trading support and resistance in hammers and inverted hammers. And again, you probably have a different view of trading and investing tonight after going through some of this from what you thought it was before. It's a simple pattern recognition. You can make this as complicated and complex as you want, but it's really not that complicated. And as I said from the first night, the most difficult part of trading, and I will say this forever, is the discipline and the emotional component. If you are a person who can follow a plan, if you can have rules for your trading and investing, and you can follow them and not get emotional, you can be a successful trader. That is the key. These technicals and reading charts, that's the easiest part. And you're probably saying, well, what I don't understand. There's an emotional thing that comes along with when you're trading and you're in a winning trade and you're seeing it go up and you're seeing your profit increase and go higher. That is an exhilarating feeling. But the flip side of it, when it's red and you're losing money, that is going to test your mental perseverance, your ability to withstand adversity. And that's why having a plan and the discipline to follow your plan is key. But the technicals, the pattern reading, it's not that hard. All right. Okay. Let me see if I have any other slides to hit before I open it up to questions. So again, just putting it all together, something simple you can do: identify support and resistance, identify what the trend is, find your hammers or inverted hammers, what type of pressure do we have, and then trade it. I showed you a simple way to trade it here tonight. Real fast before, if you have questions, start putting those in the chat. Discovery call, I'm trying to share this with you if you want to talk more. But let's go through some of the trade questions that you have here. How can we get the 10 EMA line on TradingView? If you go into indicators, just type in exponential moving average, and just email me and I can help you do that. But if you go into indicators, type in exponential moving average, add it, and then just put in 10 minutes or 10 days as the time frame. Then it'll put it on your chart. Michael, you're welcome. What percent of account do you recommend using on any given trade? So they say, like in a lot of books that I've read, or people that I work with, or people who coach in this arena, they'll say 1 to 2% of your account. To me, that's way too much. So it's got to be a number that's comfortable for you. I wouldn't do a percentage. I would just do a number that you're comfortable with. So just to give you an example, when I first started out, my account was 50,000 and I was trading like $25, $50 risk. Right. And then as I got comfortable, I bumped that up, but I was not comfortable risking $500 on, on any given trade. That was too much. And then as your account grows, let's say it's 500,000, if you do 1 to 2%, you have to be comfortable risking $5,000 to $10,000 every trade. And the thing with trading is, if you're not comfortable or ready for what you're risking, you're going to know right away, because when you're losing, it's physically going to be uncomfortable for you. Right. So I always say, go small, go slow when you're trading. It's understanding the term, strategy, et cetera, then applying it to make a clear picture. Definitely learning and discipline, as you said. Yes, the discipline. I can't. And a lot of the times when I'm coaching, I feel like I'm being redundant and saying the same thing, but it's really just, the concepts are simple. It's just the hard part is, and you'll find out, here's the one thing you will find out through trading. If you're a person who thinks you're really disciplined, you're going to find out how disciplined you are. You really will. And it's eye-opening. It really is self-discovery at its finest. Can you show us one more time how to paper trade in TradingView? Yeah. So real fast. So if you just go over to, and I haven't really used it. I've opened some stuff up, and I think I probably have open stuff in here. If you just come down to the bottom here, it'll say paper trading. Click on it, and then this button here will say trade. You can click on that. You can put in an order, and you can put in the type of order you want, limit order, stop order, market order, the price that you want. You're going to click take profit for the where you want to get out for your profit. You could put your stop loss in here. Units would just be, however many shares. Yeah, then you time and force, if it's a day trade, if it's a swing trade, and then you just click buy, and then it's going to put those numbers on your chart. Now, I didn't really set anything up. I just entered it, but you could see here's the buy. We want to buy at 241.49. Now you can drag and drop that and change that at any time. And then it'll bring up, if you want to modify it to where you drug it, you just hit modify. Then you can move your stop loss. You can move your profit taker, and, just get in there and tinker around. If you want, in a discovery call, we can go through that. I can walk you through how to use it. It's pretty straightforward, but you definitely, this is where you want to start. You want to start by practicing with this with fake money, where you're not risking anything. You don't want to do what I did, trading real money right away. Right? All right, let's come back over here. Chat. In a swing trade, are you able to set up a bullish trade and a bearish trade at the same time? No, you can't. You can't do that. Now, if you have multiple accounts within a brokerage account, you can. But if you're going to have a concept and an idea on how to trade something. So if you have a concept or an idea or a plan, your plan is either bullish or bearish. So what that would tell me is that you don't have a plan. You're just, hey, I'm going to try this bullish and bearish. They're going to cancel each other out. So you want to stick with one trade on a stock. Now, you could do things where you can hedge your position with options. That's a bit more advanced. But, you know, again, that's where that discipline thing comes in. What could be expected in the discovery call? That's just where we talk about the what your goals are with trading, what you're looking to do, whether it's supplement your current income, you want to grow your long-term portfolio, if you're looking to swing trade, long-term invest, day trade, and then talk about what the coaching options are that we have. Samuel, if you could repost that question, just so it comes back in. Would you pull up the putting it all together slide again? I will. I'll do that here in a second. Fredo, you got it. I'm glad to help. Sonny, hey, it was great talking to you today. Thank you. Bear hammers at support. Yeah, bear hammers, bearish or bullish hammer at support still indicate buying pressure with that long lower wick. Bull or bear hammer matter at support or resistance. Yeah, so you can, if it's either type of hammer, that could be an indicator that it's going to start going higher. What type of order did you use with your NVIDIA gap up winning trade? So that was, I was buying what are known as call options. So there's something that's called trading options, which are insurance contracts on stocks. Now that's a little bit further down the line. I didn't start out trading options. I talked a little bit about covered calls and selling puts yesterday. Those are options, but my trade on NVIDIA was covered calls. And that's takes a little bit of time to understand, but you can do a stop loss for options. Typically, when I'm trading options, I don't do a stop loss because I'm buying them with a lot of time, but you can. What website are you on for the paper trading? That's TradingView. You can do an options trade like that. Okay, got bullish or bearish. Yep. Let's see. What are the main differences in the strategy between day and swing trading? What do you look for differently? So for a day trade, I mean, we're in and out. So we're capitalizing on a movement that we think is going to happen within an hour and a half. Swing trading, we're looking at something where we feel, hey, there's a lot of momentum here, and this thing's going to run for a while. It's probably going to retest for a bit and pause, but it's going to go higher or it's going to go lower. And so with the swing trading, you're trying to capitalize on several days to several weeks to several months to profit as much as possible on a big move coming. Right. So, one thing, whenever you have large pullbacks or big sell-offs in the market and you bottom out, those are times where you can get into swing trades and buy something at a low value. Like I showed that Meta where you could got it at $89 and it went up to $320. In 6 months, something you bought for $89 went up to $320. So 329 minus 89. So if you'd have bought, let's say 500 shares of that, that's $120,000. So your swing trades can be very, very profitable because you're letting them run. You're capitalizing on momentum. If you're setting the profit taker and stop loss, how do you then have control over day versus swing? Would it be dependent on the movement? So for day trading, when I set a day trade up, if I'm done monitoring it on the computer, I just pull it up on my phone and I can modify it from my phone. It's very easy. So you'll just know when you get into a trade, okay, I have to check in on this trade like every 5 to 10 minutes. Or if it's like a high stakes trade where I'm going with a large position size, then I will watch it on my computer. I'll kind of nurse the trade or babysit the trade. Yeah. So great questions. You guys have been super engaged. That makes this fun. Let me see. All right. So quiz time. So here we go. We're going to do practice quiz because tomorrow's the big day where we're giving out the accounts. We're going to have 2 winners. So let's get warmed up. We'll do a couple practice questions. Type in a $sign if you are ready for your quiz. All right. Oh man, that was fast. All right. Here we go. Question number 1. I'm going to give you guys 5 questions tonight for some practice. Long upper wicks indicate selling pressure. Selling pressure. Yes. So just to point out, tomorrow when we do the quiz, I want the full answer. So selling pressure would have been correct. So a lot of you put selling in there. Samuel Joseph would have been the winner of that one if we were going for it, because he put the full selling pressure in there. So good job, Sam. All right. The next question. Let's go with long lower wicks indicate what? Buying pressure. Boom. Perfect. Good job. All right. 3 more questions. A hammer candle found at a pullback near support indicates what? Trend reversal, likely to go up. All those are acceptable. Reversal. Yep. An inverted hammer candle found near resistance indicates what? Should go down. Going down. Decline. Yep. Trend down. Reversal. Bearish. You guys are sharp. You're crushing this. I can't chip you up. All right, here we go. Here's one. We know when a trend is bullish. We know when it's bearish. When the stock is going sideways, should we trade it? Yes or no? No. Guys, you did great. You did great. So we have covered a ton so far. Tomorrow, we're going to get into actually setting up some trades. I'm going to teach you how to calculate risk to where if you know that, hey, I'm going to start practice trading. My risk is going to be $25. I'm going to teach you how to do the math, the second grade math on how to know how many shares to buy, where to put your stop loss, profit taker, all of that. I'm going to walk you through what a month looks like in the life of a profitable trader in terms of daily wins and losses, so you can see how that plays out. So a lot of great stuff still coming tomorrow, the last night of the boot camp. I can't believe it, but I really do want to thank everybody how engaged you've been. Again, that makes this so much more rewarding. Hopefully you're learning a lot here. And if you're putting in this time, it shows that trading is something that is an interest of you. So very excited about that. Hopefully I get to connect with you on some discovery calls. And with that said, that's going to do it for night number 3 of the Replace Your Dollar Bootcamp. Thank you guys all so much. I will see you back here tomorrow. And don't forget, we have those 2 accounts that we're going to be giving away to 2 lucky winners. All right. So everybody take care. I will see you back here Thursday, September 28th for day 4 of the Replace Your Dollar Bootcamp. Take care, everybody.